Now we move on to what promises to be another substantive and high-caliber panel discussion. The discussion is on financing shipyards, technology and infrastructure, unlocking supply-side growth. This panel will be moderated by Mr. K Mukundan, Senior Principal Strategic Initiatives and Policy Advisory, National Investment and Infrastructure Fund. May I invite Mr. Mukundan on the dais with a huge round of applause. Thank you. Joining him are our panel members, Mr. Rajeev Nair, Advisor, Swan Defence and Heavy Industries Limited, Mr. Sachin Kulkarni, Head Marine Business Sales South Asia, Wartsila India Private Limited, Mr. Naveen Rawat, GM, PF&S SBU, State Bank of India, and Ms. Jayati Roy, Deputy General Manager, Aviation, Marine Hull and Marine Cargo Technical Department, the New India Assurance Company Limited. A huge round of applause for our panel, and over to you, Mr. Mukundan.
Am I audible? Yeah. Good afternoon, everybody. It's my honor to moderate this panel on financing of shipyards, and we have a very esteemed panel here. To my right is Mr. Rajvi. He's a veteran of the shipbuilding industry, shipping industry. He has been there for 38 years in GE Shipping and currently with Swan Shipyard. We also have Sachin. Sachin works with Wartsila Diesel. He has been another 30 years of experience in marine ships, and he's a veteran here. To my left, we have two financiers from the financial services. My colleague, Mr. Naveen from State Bank of India, the largest bank in India, and Jayati Roy from National Insurance. Without much ado, my name is Mukundan. I work with this organization called National Infrastructure and Investment Fund. We are a sovereign-linked private equity fund. We manage about $5 billion of equity money, which has been fully invested in India. We are a government-backed institution. The government owns 49% of us, and the balance 51% is something which we have raised from global investors. That's a small introduction about myself. Let me go direct. The entire shipbuilding industry, we have heard since morning from DG Shipping. We heard from others as well about the big focus which is being given by the Government of India on developing this shipbuilding ecosystem, ship ownership and carrying of Indian cargo by domestically flagged ships. Various measures are being taken. There are financial incentives for about $10 billion, which will be implemented over the next 10 years in developing new shipyards, in subsidy for building of domestically built ships and stuff like that. I would not go into the details of that. That has already been explained by the previous panelists in the discussions. Let me go directly to Rajeev. Rajeev, you have been, historically, if you see the Indian shipbuilding industry, at least in the last decade or so, has been predominantly on defense-related shipbuilding. And of late, the intention, objective of the maritime initiatives itself is to ensure that more of Indian cargo-bound ships are built in India. And recently, we saw some successes as well, with CMA placing orders for LNG ships, 6 container ships. Do you see this as India becoming a major shipbuilding yard? Is it possible? What are the specific, in the entire value chain of the shipbuilding itself, is there a specific area where India should focus on and focus? What are the strengths which India has, and how do you see the outlook for the industry itself?
Thanks, and good afternoon, everyone. To me, and I'm only talking commercial shipping now. You're very right. Naval, we have reached a certain level. Fantastic. But when we talk of commercial, of course, when you look at Chogles, when you look at Cochin Shipyard, they have made, even in the last few years, they have developed clients which are there. It's not that Indian shipbuilding has not at all been in commercial, but yes, if we want to look at really the growth pattern, then we have to be competitive. And for me, it is not being competitive alone in price. What you have to see is what does a ship owner who is going to come and order, for him, price is important, delivery is important, and most important, quality is important. So if India wants to be competitive in commercial shipbuilding, I think all three have to be taken into factor. While commercially we do have now all this support of the government, whether it be directly through a subsidy scheme or whether it be through enhancement of brownfield shipyards, greenfield shipyards, all those will contribute in making us commercially attractive. But the other part, delivering in time and quality, is something which the shipyards themselves have to strategically work upon. The capacity enhancement has to be done in such a fashion that you start competing on actual delivery. Today, positively, we are in a very good position because the slots are not there in China, Korea, and Japan. It's an advantage for us. So we can use this time to sort of take that to advantage, but we can't rely on that. The day they start becoming more competitive on delivery, we'll be struggling if we have not brought our processes into tune. And quality is something which in commercial nobody will ever dilute on, especially today when we are talking of new technologies. And that is, again, I look as a positive because everybody is starting at the same level, at least from the technology point of view. We may not have it in India, but when we do technology transfer, when you look at dual fuel engines, when you look at, and I'm sure Wartsila will bear me out on this, it is something which will take time to mature. So we are also on that same curve, but we should take advantage of this, ensure that on all three fronts we remain competitive. Thank you.
Do you think the supply chain and the capabilities, they exist in India for the kind of the vision which the government itself has got?
There is one.
If I can, what kind of interventions probably may be required, or what are the areas where we need to improve upon ourselves on the supply chain design and stuff like that?
Very valid point, because I think the key thing is the ancillary development simultaneously. As long as we are dependent totally, especially when I talk of now bigger ships, we don't have two-stroke support in India. We don't have a single licensee. If we are going to start talking of dual fuel, the dual fuel supply system, and these two components itself form a major part. You have seen in the morning, I think, on steel itself, how much of differential exists. And we do have this 30% to 40% requirement of developing, being part of the subsidy scheme. If that is hampered, when we start moving into these equipment, high technology equipment vessels, we cannot afford to have that. So we will have to have this ancillary development along with, possibly today, and I do understand the ministry is now looking at it, how to support the ancillary industry also to be able to develop. I would slightly differ on that we would require to reach a level of 5% before ancillary equipment steps in. Possibly it will require policies to come in which will have to make this ancillary start coming in now, because that and one of course aspect is the capacity development on the human factor side, which is a very soft topic but also equally important. Those will have to grow side by side, otherwise the vision would have challenges, especially when we start talking of bigger ships, of newer technologies, of relying totally in some cases on equipments on only imported content.
Thank you. Let me see if we can come back to another round. We are already running late by about half an hour, but nevertheless. Now over to you, Sachin. India has great ambitions for building large ships. The government has included large ships into harmonized list. Big orders are being placed. There are domestic building. But we see that one of the important things is on the engine side, there are hardly 3 or 4 global manufacturers who control the entire supply chain of marine engines. And often we see that the lead times for supply are more than 24 months, 36 months, and there has been a big bottleneck. while the government of India wants to be, we have the Atmanirbharta as one of the objectives of the government. We want to set up domestic manufacturing. Do you see easing, couple of questions, do you see easing of the supply chains on the marine engines globally over the next couple of years? Do you see the ambition of the government of India to have domestic manufacturing of marine engines as a reasonable aspiration for the government of India? And if it has to be achieved, what kind of ecosystem, what are the interventions which we need to do?
Okay, thank you for the question and good afternoon, everyone. The question itself has multiple layers to it, but okay, I'll try to address those points. Now, before we even move into the, let's say, manufacturing gamut of the engines and so on and so forth, importantly, as a country, it's important for us to understand with all the stakeholders that what happens when we are talking about a shipbuilding. You know, it's not typically just the shipyard issuing the specifications or the owner asking a particular shipyard to build a vessel, shipyard issuing the specifications and the vendors are quoting. What we have seen in our experience, basically the very, very early engagement with the ship owner, ship designer, has brought out the absolute clarity in the technical specifications and the type of vessel configuration, which owner at times is not even clear how he wants to build it. When we look at the current green shipping context, there are a lot of different options ship owners has, and there is a lot of guidance which is required to them that what kind of fuel they should think of, whether they want to have a methanol now, methanol ready, methanol capable, ammonia ready, and so on and so forth, or LNG for that matter. Now, when we are having a maze of all these options, obviously collaboration and the early engagement along with ship designer going to make things more visible and more clear, which ultimately helps the lead time of all the key equipments which are required for that particular vessel. So this is a point number one. Point number two, when we are talking about the ecosystem, now this particular word been really used very, very frequently these days, that what kind of ecosystem we need to have. And if I had to address this point, when we're talking about the clusters, when we are talking about a particular shipyard, what kind of vessels are we really talking about? And the reason I'm making this statement is the ecosystem is not same for all types of vessels. Okay, the point what you said that 24 to 36 months is typically required with respect to the two-stroke engines, which would go into the bigger ships which we have ambition to make, even ACI is planning to make. But apart from that, there are many other vessels which at the moment, which I call as a sweet spot for the Indian shipbuilding, that is the coastal vessels, short sea shipping segment, wherein primarily you need a four-stroke engines. Now the ecosystem for the four-stroke engine is much different than what you need for the two-stroke one. And the delivery time is always typically 12 to 14 months. In my observation or experience, the delivery time of the engine of this type of vessel is the least compared to the propulsion and the automation and the electrical systems. Typically we are talking about engines, but trust me, engine at this point of time, and I'm talking about four-stroke engines, has the least delivery time compared to many other systems which is required on the board. So are we missing something important over here? And if I have to address on the, let's say, manufacturing or Make in India context, that's where in Wartsila, we are actually focusing on how we kind of build up on the propulsion side, because in our experience, we see that needs longer lead time of the vessel for a construction point of view. And that is how we started with water jets, especially for naval application to start with, wherein we have done 64% localization. Recently, we have taken the decision of manufacturing thrusters in India in a phased manner. We have already returned to the ministry as well. And that is where I feel that we can take the high lead time items, look at which is the one which we could really help to the shipyard. Engine is something which is being talked about in every forum, but I must share here over here that we need to look at the other systems also. Now, coming to the example of even we go with the engine manufacturing in India. A typical four-stroke engine has got roughly around 3,000, 3,500 parts. Now, when we say make engine in India or make engine in particular country, it's not something which is one single item which is produced in a particular fashion. It's a assembly of the multiple spare parts which is managed based on the supply chain which is existing all over the world. Now, if today we take a call of using the supply chain, same supply chain, and start building it in India, the cost and the delivery time will be much more than what we are facing today. And that means the outlook is supposed to be that how we slowly shift the supply chain also in India. Now that's a humongous task. Okay, and I'm just sharing this in detail because it's important to understand when we talk about manufacturing in India, what does it actually takes to shift the supply chain from the existing settled one to something new territory. But of course, the approach has started. The percentage of, let's say, localization might start modest, but it has already started. And moving forward, I'm sure we'll have more and more equipments coming in India, wherein by the time we have an absolute clarity on what type of vessel we are building in our country and what kind of infrastructure it would need, based on that, manufacturers will have more clarity on what kind of localization they need to do. Thank you.
Thank you. I'll come back to you with some more questions. Let me go to the other side. Somebody said the elephant in the room, financing is not happening in the last session. And let me address it to the biggest bank of India, the Dada of the Indian banking system, State Bank of India. Mr. Naveen, Indian bankers have had a very mixed experience of financing shipyards. We saw in the last session 6 shipyards have gone through the IBC process. Bankers have lost money. And that's the reason why financing is not happening either for shipyards, and also there is a lot of uncertainty about the financing of the ownership of the ships itself. Given this background of what has happened over the last 15-20 years, and the ambition of the government which wants to promote shipbuilding in a big way in India, and for strategic reasons, how does a bank like State Bank of India look at the current scenario? What kind of guardrails you think are required in your financing? What can the shipyards look for? Private shipyards. I'm talking more of the private shipyards because I'm assuming that the public sector shipyards are self-funded, they are cash flow positive, they have huge amount of cash balances on their balance sheet itself.
Yeah, thank you and good afternoon to all of you. So, State Bank also, as of now, our exposure in this sector is almost 13,000 crore. Recent year, there were stress, particularly in the private sector. Reason being, this sector is capital intensive, then construction period is around 2 to 4 years, and in case of complex ship, it goes beyond 4 years also. So, huge capital is required for funding the shipyards. Further, the requirement of non-fund based because of the structure of contract. There will be performance guarantees, advance BGs, and this refund BGs also. That requirement is also there. Further, this model works on sell first, build later. So with a small advance amount, they have to construct the ship, and in case of any downturn, these contracts were cancelled and our non-fund based exposure was crystallized into fund based, and then stress was there. Further, there were supply chain risks. Supply chain risks were also there. Then this industry is cyclical industry, and because of this cycle, several of our assets were in stress, and ultimately they are gone into IBC process. Further, in case of enforcement of security also, assets were not, the secondary market is not there. In compared to any other security like real estate or machinery, there is no secondary market for the unfinished ships. So enforcement is also an issue. So all these factors had contributed for the stress in the sector. And as of now, if we see our pipeline, there is nothing much in the pipeline. Existing exposure of around 13,000 crore is there. So yes, these are the challenges which we have faced in the recent past.
But how do you look at it? The government wants to push the domestic shipbuilding.
Yeah.
They have announced a $10 billion program. They are giving support. One of the important things is that you talked about the cyclical nature of the industry. To avoid this kind of risk, one of the presentations, there was a thing that there would be assured offtake where the oil PSUs will aggregate the demand, similar to what the Petronet LNG has done the contract. Similar aggregation of demand to some extent, therefore, at least the demand for ships will be the. How do you look at this with these kind of cases?
So I think that is one of the steps that we can think of, like group oil companies, because majority of the crude and oil is imported and we can use our Indian flagships there. So model can be there that they can take ownership 20 to 30%, and it can be a group of this captive structure also, like in other sector also. That is one way of looking at it. Then if we compare with other country like China, Korea, so that leasing model also, it will be asset-based funding only, and operator will don't have to bring the capital also. So that model also we can think of. And with the government initiative, like pricing is one of the other factor. So pricing wala part, because other institutions, they have international market, they have the access to the lower cost of fund. But as of in our country, our cost of deposit will be on deposit base only, and so lender will have limitation. So blended finance can be think of like with government support of VGF, grant, subsidy or interest subvention. We can blend that finance with banks financing that particular project or particular shipyard with the government support, so that that model can be bankable, and that incentivize the shipbuilder also.
Thank you. The two components which have been brought out in the last budget and also in the shipbuilding assistance program is there is a interest subvention scheme where for shipbuilding, and this is very specific for shipbuilding activity, the government has announced, I think it's about 4,000 crores is what has been being provided as interest subvention, which gives about 4% subsidy for domestically built ships during the construction phase, and it will be available for shipyards. The second one is a separate announcement for all infrastructure projects under construction in this country. There is a first loss credit guarantee scheme which is being proposed by the government. And since shipping has been brought under, and shipbuilding is also an infrastructure activity, hopefully as the scheme progresses, you will get some kind of a credit guarantee during the construction phase as well. Let's wait for the details and see. Insurance, one of the important aspects for, especially if India needs to build ships, you need to provide guarantees and performance guarantees, and even after the ship is manufactured. So from as India's leading insurance company, what are the policies which national insurance has got? I'm sorry, your national, New India, sorry. New India has got, and how do you look at this sector?
Am I audible now?
Yeah.
Thank you. As you said that ship building itself, it's a very capital intensive, risk intensive and a technology driven long gestation period process. So it is subject to a lot of like technological risks, financial risks as well as liability risks, and that is where insurance comes in. So insurance as a base product, like we have the shipbuilders risk insurance policy, which is kind of foundational. It has been there for quite a long time now. So based on the thrust on the shipbuilding development scheme, now the government has focused on a few products which are purely credit based. So one of them is like it is like pre-shipment, which is mostly the buyer's default during the construction period. That coverage is required. And the second one would be the post-shipment, that is non-delivery, our non-payment after the delivery is done. And the third would be the vendor liability, where risk or the coverage arises for non-receipt of non-delivery of critical equipment during the construction process. Apart from that, there would be other surety-driven projects like products like performance guarantee or say credit guarantee products, refund guarantee products, which are also in the pipeline. And as insurers, we are trying to combine the package, come up with a very an integrated package solution, which would combine all the builder's risk, the liability lines, and credit and the financial products also under one basket policy for the customers. Apart from that, yes, post-delivery there are hull and machinery policies which are imposed, along with a major thrust on the P&I coverage, that is the protection and indemnity coverage. So there is a major thrust on creating a separate P&I club under an Indian P&I club. So work is going on in that, and New India Assurance has been the only company who is issuing P&I policies as of now. In a restricted manner, yes, we want to expand our scope further to cover all such risks. So in this situation, what I feel is that insurance is not only for protection here, but it has to develop as a growth enabler, considering the thrust of the industry towards shipbuilding, and along with that the shipbreaking credit note that has come up has incentivized scrapping in a big way. So that also opens up another avenue for insurance by way of having a shipbreaking insurance as well as a new ship being built. So the protection of insurance is always there, and we have to expand our products, modify our products, incorporate more liability lines into our products, and make maybe making an umbrella product for the industry would be, is in the pipeline.
Thank you. I'll come back to you with some more questions. Sachin, let me get back to you, and you alluded to something on the green ships, ammonia and methanol-driven ships and stuff like that. One of the things is, where do you see Indian shipbuilding in those activities? Should we leapfrog? And I'm just saying that instead of attempting to build a conventional ship itself, should we straight away go into, and we saw that in the telecom sector, before every home had a landline, everybody went into a mobile. And that's something, because I'm an infrastructure man, I've been financing infrastructure for many years. And that's an analogy which I could relate to. Should we, while the conventional ship is getting built, the world will go green now 10 years, 15 years. Should we leapfrog into that? Or are we prepared? Globally, how do you see the evolution of these green ships?
Thank you. And I really wish shipbuilding would have been as easy as the mobile or handphones. But okay, looking at the context as such, I think we are in a global transition at this point of time, and it's a global industry. So Indian ship owners are cannot be isolated themselves from these regulations. What is heartening to see is also that while we have IMO regulations, but at the same time, even the DG Shipping and Indian government is also quite committed to imply the similar kind of regulations for the domestic shipping as well. Now, when we have this kind of compliance requirement, naturally someone who is looking at building a new ship would have to look into the certain green aspect. And the reason being that when we look at the ship life, we talk about roughly 25 years to 30 years. And when we are looking at the compliance, which will hit us in 2050, so we are talking about the ship life. During the ship life, the compliance would hit. And that means any type of vessel which is being looked at to build today, whether we are talking about short sea shipping vessel or we are talking about deep sea vessels, it will be important to see that what green content will be applicable there. Now, that's a let's say macro level. Getting into details, when we are talking about the vessel application, for example, when we are talking about the vessels on the coastal lane, there we are talking about more of let's say short voyage, at the same time variable load, and that means we are talking more on the electric vessels. We are talking about more of a hybrid vessels, and that means its possibility of decarbonization is taken care in the range of 30 to 40% already. Then when we're talking about deep sea vessels, where the electrification aspect would be less applicable, there we need more and more alternative fuels, green fuels. And when we are looking at that, we are talking about, again, the transition fuel of LNG, we are talking about biofuel, and then we talk about methanol and ammonia. Now, the technology point of view, I must say that the technology is ready. Technology is available. In fact, just on the record to place, we have already sold roughly around 400 methanol engines, 4-stroke engines already. The question is, are those vessels running on green methanol? The answer is no. And so we don't have to worry about technology. What is important is that how we are going to have the supply chain for the fuel and infrastructure for the bunkering is being made available. That will really make the rapid progress in terms of the owner and their decision on making more and more green portion as such. So in short, the answer is the readiness on the technology will help the owner to take the decision, but then availability of the fuel and availability of the infrastructure can be a stoppage at this point of time. However, we strongly advocate or recommend that the multi-fuel or the fuel flexibility has to be brought into the vessel. For example, if we are building a conventional vessel and then one has to go for the fuel conversion, it's going to be a really long lead time item and the cost requirement over there. Rather, one could really look into it that, okay, if I had to build a methanol-enabled vessel, then what kind of a storage, what kind of a tanks I can already build today in the new vessels, so that when we have to go for the conversion, it's a minimalistic downtime and minimalistic cost will be there. So those aspects can be considered while we are building the vessel today. Thank you.
Thank you. Interesting points. Rajeev, your take on that, and secondly, on Swan's own plans of shipbuilding and with the new programs which are coming up, what are your own growth plans, and how do you look at the green transition itself?
Thanks. Just taking on from what Sachin said, I think to any ship owner who is going to order a new vessel today, it is not only about ordering something for today, it is for something which will last 25 years. It could be a company which would run it for 25 years. It could also be a company which would possibly sell that vessel after some time. So they definitely will not get into an asset which could lose value just because it is not taking the technology which is available today. So yes, ready notations are available. If one can't take a decision today on that extra cost, one can always at least go for the planning phase to make sure that it doesn't become a hurdle in the future. So I would also say, and this is supported by the sort of inquiries we are getting. The inquiries today we are getting are always for dual fuel vessels, especially when we are in the larger segment. In the smaller segment, it's already an established pattern for short sea, how you can do it. But major issue is availability of fuels. If you are going to be doing transatlantic, there people are confused. Do I go for ammonia? Do I go for methanol? Do I go for LNG? Especially with what has happened at IMO and what is the geopolitical issue today. But technical solutions are also coming into that. People are not only talking of dual fuel, they are talking of flexibility in dual fuel. So that tomorrow, if I could possibly have propane or ammonia, something like that. So that's where we are seeing the world moving today. And we can't afford to remain behind that and say we'll look at conventional because it is easier. I don't think in a commercial world that will work. And that's how we are looking at Swan. One key thing we are very sort of feeling good about is that this is a time when all the policies are aligning together. And coupled with the sort of demand aggregation which is happening, if that translates, then I think I made a point earlier, I may not be in agreement that you have to reach 5%. If you have that demand aggregation and that visibility is there today, that market visibility itself will create that interest for the investment into the ancillaries, into the ecosystem. So I think the key thing which at Swan we are looking at is that we do have to, considering the infrastructure we have the biggest dry dock in the country, we do have the biggest fabrication capability. What we require to do is to make sure that we are utilizing that in an appropriate fashion getting the, like, okay, at this stage, since it's another yard which is taken over in NCLT, so we do not have that sort of choices, but still make intelligent choices to concurrently build as many vessels as possible, because volumes will create that ecosystem also around. So that's how we are looking at it. We are very happy to participate in the SCI tenders also. Let it be MR tanker, the expression of interest, VLGC. And also we got a first chemical tanker order in India. So that's a specialized vessel. And these are dual fueled, methanol ready or LNG dual fuel. And there are various other discussions going on that. So we hope to be a big player in the bigger segment in the coming future.
Thank you. Since we are on this question of new age fuels and green fuels and all, Jayati madam, I would like to ask you, this is a new area of ships, and we do not have, these are different types of fuel, hazardous fuel, not much of data on accidents, and the claim ratios are available. So how would then, and the government, if we want to have a domestic shipbuilding industry, ship ownership industry, a strong financing industry through insurance and financing is required. So how will an insurance company like you look at it for these kind of new generation ships which are going to come into the market?
Thank you. As you have rightly pointed out, that the main challenge here is that we don't have any historical data. So mostly our marine underwriting patterns, that is driven by historical data. But this is, now that historical data is not available, we would maybe try to underwrite those risks on a more technology driven. Based on the technical understanding of the risk. Like there are so many the toxic implications of methanol, or the explosive sensitivity of hydrogen. All that needs to be figured out, and accordingly our underwriting has to develop on our technical risk-driven models. This has also happened in the past, like wherever there was a maritime transition, insurance has always risen to the occasion and devised their underwriting policies accordingly. So green transition is something which is inevitable. It is going to happen. And accordingly, our insurance underwritings and insurance claim processing, everything will have to evolve as per that. So basically what we are looking at is a technology-driven or an engineering-led underwriting model. Along with that, of course, we would be a little careful initially because we don't have a preceding year's loss ratio. There would be substantial reinsurance arrangements in this, that alignment with the global reinsurers, and especially with reinsurers who had experience in this sort of underwriting. So that will help us to gear up to the occasion and cover those risks. But yes, we have done prototypes earlier also, and new technology has been tried and tested. So there is no, no such thing that insurance will not be able to, address this challenge. So, it is insurance in this case also, as I have said, that they would turn out to be an enabler for the green transition.
Thank you. I wanted to come back to Naveen, but before that, I see that there are only 3 more minutes. I wanted to go to the audience and ask if there are any questions for this panel which we could answer. I don't see any hands being raised, which means that either this is a boring session or I am between your lunch and that's okay. Because I saw at least 3 or 4 questions and people wanting to ask more questions in the last panel. That's fine. Mr. Naveen, let me come back to you with the last question probably. We are seeing that China, Korea, everywhere, low-cost financing is being bankrolled by the banks for shipbuilding, ship ownership, and the entire ecosystem. And one of the biggest cries of the industry has been that we are not getting low-cost financing. What can India do about it? How would a bank like you look at it?
I think that part we covered in the last question also. So their model is different, like their availability of fund, lower cost of fund is there. Then they have dedicated export-oriented units. Further, they are having sovereign-linked shipyards with state backing. Then, in case of our Indian banks, our cost of fund is linked to deposit only. So, only solution which we have discussed with the blending of the finance, like in this budget or last budget also, the 70,000 crore budget allocations for development of this sector through shipbuilding finance scheme, shipbuilding development scheme for creation of this infrastructure, then creation of Maritime Development Fund with the corpus of 25,000 crore for having an investment of around 1.5 lakh crore. So all these things will help the sector, and blending these schemes with the bank finance, we can structure that so that effective cost will be in the international, means compared to international market only, that cost will be comparable. So that is the one way to look at it, that how to make this sector cost effective and how to make this sector effective that so that shipyard builders, owners will have that equity return with the competitive pricing. And further, from the regulator perspective, if that risk part, allocation of risk wala, that risk is less compared to other sector, so then bank have to provide less capital, so that that benefit can be passed on to the sector. So I think these 3-4 things can be think of to make this sector more bankable and more attractive to the investors.
Just last one question which I wanted to ask. There are two hands. I don't know, it was an afterthought. Okay, let me give it to the audience. Can somebody pass on the mic, please? There are two people who have raised their hands.
Good afternoon. Very interesting session. Let me tell you that. Very quickly to Mr. Rawat. I'm Commodore Samantar from RIS in New Delhi. This question that you came about of finding a cheaper source of finance, when you look at the cost of finance and what is it that you stack up on that cost of finance that you have to actually offer to the shipbuilder? I mean, there's the operating cost, there's the risk cost. Can you just very briefly explain how that interest rate is built up?
So my pricing will depend on the overall revenue visibility. What are the risks? We have our internal rating system as well as we have our external rating ECR also. So because based on that, we have to provide for the our risk-weighted asset that we have to provide for. Like for a BBB category, we have to provide for 100% risk-weighted asset. AAA category, it will be less. So my pricing will depend on all these factors: risk, my revenue visibility, as well as what are my recourse available to me. So based on cost of deposit, that spread will also depend on the tenor of the loan also. Say if a 10-year loan, 15-year loan, then my pricing will be suitably adjusted to those tenors also. So overall package will be that.
Thank you. Yeah, one last question, please.
Good afternoon, sir. My name is Shekhar Doshi from Chubuku Marine Paints. My question is Mr. Naveen Rawat specifically. We are from the paint company, and we see in India a lot of bankers have burned their hands, and it came to NP and everything. We see in last 7 to 8 years, I can say, a reverse trend that bankers are holding a lot of equity in a ship, individual ship. So if the ship owner has five ships, there are 5 different companies which are maybe listed in Singapore or Hong Kong or Rotterdam or anywhere, and they invest around 40%, 50% equity in those companies. And those, if you see the Seaweb or anywhere, they are owned by those banks. And so majority of the stake are being, they go to dry dock and see the dry docking, they see the anti-fouling paints which we apply on the vessels, and understand how these anti-foulings are going to perform, because their equity is there. So in that way, you can be secured yourself rather than funding and then coming into the problem. So financing ship would be one of the issues. Do you think that this is a viable one?
Say from here, but that definitely we can examine.
Let me add to Mr. Naveen on this. Because you are asked about equity. I guess you are asking about equity. And what you see on the balance sheet of many of the Singapore banks is some banks holding equity in the ships. That's what you are asking. What happens is the name would look like a bank, but ultimately what happens is these are owned by funds. Equity investment is it's a bit of a challenge for a bank to do it. Because they will have to provide for 100% risk weightage, and it would be a drag on their capital adequacy ratio. So so SBI has this arm called SBI Ventures. If that is making and that is an equity investing arm, and it is not the bank's money. They pool in money from other investors and invest into it. But on the book, it will look like SBI has funded the equity, and it would be similar structures in Singapore and other jurisdictions as well. And in this context, I wanted to tell you that the Maritime Development Fund, which the government, Maritime Investment Fund, which the government is going to setting up. I'm in some way involved in the structuring of the fund and advising the Ministry of Ports on that fund itself. And I know what's happening there. It will be managed by a professional manager, which could be an SBI Ventures or an AppFit or a IFCL, or it could be anybody, any professional manager. So the manager's name is what will come as an investor in the fund and in the shipping company, and therefore it could be assumed that you are thinking that the bank has invested, but typically banks don't invest into the equity of these kind of at the individual assets. It's funds like us, NIIF or somebody which will invest into it.
Okay, thank you.
Thank you. Since there are no more questions, thank you panelists for this time, and I don't want to hold on the audience for their lunch. Thank you everybody for this patience and listening to us.
Thank you for that very powerful dialogue on the subject. May I request our Director General, Mr. Sandeep Khosla, to present you all with the token of appreciation, and we wait for a group photograph after that. The hall is too quiet for such an illustrious panel. Thank you. You can have it. Request you all for a group photograph. Thank you.